Hey, what's going on, guys? Today I want to shoot this quick video talking about SPY versus VOO. These are two very popular ETF funds out there in the market today. The two funds are almost identical as far as the index that they track. We're going to go into a little bit more of a deeper dive today, just comparing the two, SPY versus VOO. So let's go and jump into it here. Today I'm going to be using TD Ameritrade's platform just for some of the fund information. Hope you guys can see that there. So the first one I'm looking at is Vanguard's S&P 500 ETF, also known as VOO. So scrolling down a little bit right here, so you can see the first thing that stands out to me is their very, very cheap expense ratio. I think Vanguard, like I talked about in my previous video, I think they have just changed the game as far as like offering low expense ratios for potential investors. So their assets under management, very large fund here, 792 billion. Their dividend yield right around 1.57%. Not super high there. So that's where that is. You're going to receive right at $5.95 per share. And per share is, $3.75 there. So come down, premium discount, not 100% sure, what that's referring to. I think that's whenever you purchase it, you could potentially get a discount. It was created in 2010, September 7th, 2010. Currently, we're in a bear market. So, it has been trending down over the past year, 6 months. Looks like it kind of bottomed there in October. 3 months. Starting to rally back up. 1 month. Yeah, so that's that. Looking down here, just a description of the ETF. This investment seeks to track the performance of the Standard and Poor's 500 index that measures the investment return of large capitalization stocks. The fund employs an indexing investment approach designed to track performance of the Standard and Poor's 500 index, a widely recognized benchmark U.S. stock market performance that is dominated by stocks of large U.S. companies. The advisor attempts to replicate the target index by investing all or substantially all of its assets in the stocks that make up the index, holding each stock in approximately the same proportion as its weighting in the index. According to Morningstar, it looks like it's a 4-star ETF. I like Morningstar. They do some. They cover some really good data points and comparisons for ETFs. Looking at the market return, so this is tracking the market pretty much. So that is that. Looking down at the top 10 holdings, the sector breakdown, you can see here how each of them are broken up, the main category and then the subcategories within each one of those. Top holdings, anyone could have guessed this, Apple, Microsoft leading the way at 6.31 and 5.40, and then so on. Normally the top 10 holdings, make up a big percentage of the overall portfolio, sort of at 11, 13. Yeah, so, these top 10 owners do take up a big chunk of it. The biggest sector looks like technology. Correction. So sensitive and then technology for the individual category is the biggest sector there. So yeah, let's go ahead and look at what else can we see. Let's go ahead and look at the performance. I know we've already kind of looked at this before. The performance for VOO, growth of a $10,000 portfolio. Back in 2022, that was probably earlier in the year, almost 18,000. The best 3-month period was from June to August 2020, 20%. Worst period was March Wow. So right before this 3-month period was actually the worst. So that's pretty interesting. Pre-tax return, 9.84%. Tax adjusted return, 9.28%. Some other things like that. VOO so far year to date, 6%. It has pulled back a little bit the last few days here. 2022 bear market, minus 18.19%. 2021, pretty big year, 28.78%. 2020, 8.29%. And 2019, 31.35%. So, 2019, 2020, and 2021 were all pretty good years. 2022, we had a bit of a pullback there. Since inception, 13.27%, so that's pretty good. 10-year, 12.64%. So yeah, just a good old S&P 500 ETF here, VOO. So let's go ahead and switch over to SPY. Like I mentioned, very similar. There is a little bit of difference here, and I'm going to talk about kind of. So the first thing I see is the expense ratio. So that's what everyone looks at. VOO is 0.03, where SPY is 0.09. Dividend yield is pretty much the same thing. SPY is a little bit higher in price. Inception date goes back a little bit longer. 1993 was their inception date. And then, yeah, the market returns are going to be pretty similar, guys. Management fee, 0.06. Yeah, through the description. Yep. So the big thing about SPY versus, so the assets are a little bit less. I think VOO is like 700 billion, still a lot, 380 billion. The biggest thing with SPY versus VOO is this volume, right? So let's look at that. 70 million on SPY versus VOO was 3 million. So keep those numbers in mind, because to me, those are, some of the biggest differences. Obviously, the expense ratio, a lot of people look at that as well. But, that's going to be the difference of $9. $9 for every 10,000 versus $3. So, it is 3 times the amount. So if you have a lot of money, the difference in that can be, a pretty big amount. But, the use case for SPY is the volume, right? So you're going to have a lot more liquidity. You're going to be able to get in and out of, your position quicker. The bid-ask spread is not going to be as big. I'm trying to see if there's like an option chain. Here we go. So, yeah, so 70 million versus 3 million. So if you're a trader that sells covered calls, I'm not sure if it's going to even show us. I might have to log in, but see if it'll show me like an option chain. That's what I'm trying to look for, but doesn't look like it's going to show me. But the differences between SPY versus VOO, like I talked about, that option volume. So, and the stock volume. So if you're trading covered calls, SPY is superior to VOO. First of all, because SPY is offered 3 times per week. So typically there's going to be an expiration date of Monday, Wednesday, Friday. Whereas I think VOO is only once a week. It might even be once a month. So the opportunities with SPY are significantly more. If it's once a month, I'm going to have to confirm that. But if it's once a month, then there's not nearly as many. Because, potentially if there's 3 a week with SPY, that's 12 per month that you could do, versus VOO is 1, right? So 12 opportunities to sell premium, to sell covered calls, or 1 with VOO. So if you don't want to sell options, if you don't want to sell covered calls, VOO might be a better solution for you, or a mutual fund equivalent of that. But if you want to sell covered calls, just create some additional income. Do understand your risk with covered calls, but if you want to implement that strategy into your trading strategy or your investment strategy, then SPY is a better option, and you can make up that difference in expense ratio very easily. You sell a couple of covered calls a year, and you're gonna make up. Obviously depending on your portfolio size, but I think you could quickly make up that difference in the expense ratio. Sorry, gonna call here. But yeah, so that's pretty much it. The performance is very similar. They're tracking the same index. The biggest thing is the expense ratio. But if you're one that knows how to sell covered calls, SPY is superior to that. If not, if you just want to buy and hold, a lot of people, that's probably a great strategy to implement. Don't put any extra thought into it. Just buy VOO or buy passive index funds. That's a great solution as well. But by all means, do your own research. I'm not a financial advisor. I just wanted to compare the two. I personally like SPY because I like selling covered calls. But if you just want to passively invest, never worry about having to manage covered calls, then VOO could be a great option as well. So that's pretty much it for the recap. The fund manager for SPY is Spider. The fund manager for VOO is Vanguard. So those are two other things. The inception date around 2010 versus 1993 of SPY. But that's pretty much it. Please like, subscribe. Let me know your thoughts down below, which one you prefer. And yeah, any comments are greatly appreciated. But if you're still here, I know it's a little bit longer of a video. Thanks for sticking around. And like and subscribe for more content. Appreciate it. See ya.